All right, good people, we back again. It's your boy Mind Dialogue, back on the scene, a little bit serene, but always relatively keen to all the charting schemes. So this is a video part 2 of the Spy Aftermarket Analysis. Just want to follow up with a couple things. I didn't want to leave y'all hanging. Just wanted to explain a few things before we close this thing out until next week. So if you remember, I was talking to you about how I had entered a couple trades this morning, probably late morning, early afternoon. I tried to catch the reversal to go back up, but this is what they did. It was a chop fest. So if you can see here, this is essentially all we did for the afternoon, right? Just look at here. This is what they did. So we're essentially inside of this channel right now, and I presume we'll be operating in it until we decide not to. So, you know, this is just a chop fest. This is like, you can't do nothing with this right here. This is completely disastrous. And if you try to get in the trade like I did, you might have caught a quick, barely any profit, but you can't do nothing with this. And so I had already decided and assumed whatever risk I had. I lost on both trades. The first trade, I got it at 62. I think it went up maybe into close to 70 at one point, or in the 70s, but it wasn't my profit taking area, and so I ended up getting stopped out at around $46. So what's that? 6, 12, 18, probably around 25 to 30% loss on that. And then I entered again, same contract. The contract expired on Monday. It had a pretty good delta. I'll be explaining what a delta is and Theta and all that stuff to the best of my abilities. These are variables inside of the contracts that you choose to trade, and they essentially dictate how a contract is going to move based on price action of the way the S&P is moving once you enter the trade. So we'll talk about that more in depth probably in a later video. But the delta that I had was pretty good, which was around, I think at the time, I believe it was like 0.20, possibly 0.25 earlier in the first contract that I got. And what I'll leave you with right now, before I go in more depth later on in another video, is, you know, if you have a delta of 0.20, what that essentially says is, theoretically, for every dollar that SPY moves in the correct direction that you chose, you should theoretically earn about $20 per contract, right? And so if I thought price action was gonna go up, or in the options world they call it's called calls, right? Calls for going up, puts for going down. But if I chose the proper direction and SPY actually moved $1, theoretically I would earn about $20 per contract, which is 0.20 times 100, because each contract in options controls 100 shares, right? But it all depends on the momentum, how fast, how slow price moves. If price doesn't do anything like this choppiness, it kills your contracts, because there's also another variable called Theta, which is time decay. So whenever price is just like chopping and sitting, that actually does not work in your favor. Even if it's going up gradually in the direction you want, it has to do it in a very, I would say, steady motion. And in here, you can see it's just like a wick fest, just a bunch of wicks, bunch of chopping. So not fun. So that's what happened there. You can the candle that we identified earlier, this was the entry to get in on because it gave you that first leg move down, and then price came back up into an inefficiency, which also most likely coincides with a key level of the Fibonacci retracement tool. So if we take it from that entry swing high candle down to, let's say, this first key swing low, there's a couple swing lows here, but this is the first key one right here. So as I was saying, when you measure you utilize the Fibonacci retracement tool and take it from that swing high candle that began the move to send us down on that first leg down. If you measure it starting from the top going to the bottom, right? 1 is always going to be the starting point, 0 is going to be the end point. Now, this is a little different than what I've measured from before. I think most times when I've measured it before, I started from the bottom going to the top, because when I was doing or measuring gold, I wanted to see what was the last level, or I wanted to see if we could get to the 62% level, which was the last level in the sequence of the measurement that could hold us up to continue up, right? Now, because I measured it from the top going down, or from 1 to 0, this in the past, the 62%, when I measured it from bottom going to top, this was your 62%, and now it's your 38%, right? And it all aligns, because if you take 0.38 plus 62, you get 1 whole, right? But because I started from the top going to the bottom, the way in which I would like to see price action function is, once we go down, or once we're below, right, these levels, I want to see how price action behaves once it comes back up to these levels. And as you can see, let me get a path tool here. Once we start selling off from the swing low, we go down here, and then we come back up here, right, to the 50% point, or the halfway point of that first leg down, or from where I measured from start to finish. You get 2 taps or wicks into the 50%, which is 628.15, which is also inside of a bearish fair value gap. You can see the red area here, right? They tap into it twice, and then we reject to get that second leg down, right? And you get like this W type sequence. Right now we're here in aftermarket. You get this W type sequence, right? This, oopsie. You get this like lopsided type of W or whatever, but price then starts chopping inside of this channel here. So yeah, that's helpful, right? Because now the 62% up here, as price is below it or comes down and breaks all those levels and comes back up, because this was such a strong trending move down, the way that you're able to determine if the move is not done is how price then behaves once it comes back up to these key levels. So sometimes price will reject at the first confrontation of the 38%, but in this case it decided to go to the halfway point, wick into it twice, and then send it down the rest of the way. Sometimes price will come all the way back up to the 62%, and it will be the last level that it can go back up to and still get set down. So that's how they play their manipulation sometimes, and that's how the Fibonacci retracement tool can be helpful in scenarios like this. But I want to draw your attention to something. Up at the 62%, you get, let me move this over slightly. Up at the 62%, you get a wick that wicks into the 62%, and then another wick that comes just shy, but they essentially connect on, the opposite sides of one another basically in an algorithmic way, meaning like in a very coded way. The algorithms were able to, essentially communicate with each other to indicate that this area right here was balanced out. I'm presuming that's why we didn't fully come back up that high, because this area had been balanced out very nicely, and the bearish fair value gap was sitting right above it, right? So it just decided to come back and tap into this bearish fair value gap down here that coincided with the 50%, and then it got set back down, right? So it's always helpful to measure all of the different ranges. Now, let's say we measured all the way down here to the lowest point. So that is right here. I'll highlight all of the swing lows, or most of them, right? These are all different swing lows. And I'm currently on the 7-minute right now. That's a customized time frame that I created for myself. I was doing some calculations and stuff, and I just wanted to see how price action behaved inside of unconventional time frames, like the 2-minute, the 4-minute, the 7-minute, 14-minute, 21-minute, 32-minute, 42-minute, so on and so forth. So yeah, these are all different swing lows and things like that. So yeah, that's what happened. We came rebalanced and then got sent down the rest of the way. As you can see right now, let me take off some of this noise off of here. So we're inside of this channel, and it looks like, based on, let's bring this up to the first important swing high that was created in pre-market right before the market opened. That was at 9:22 a.m. Market opens at 9:30 a.m. So at 6:29.46, we got that swing high up there. They came down. Then you got this aggressive manipulation wick that came back up, was not able to contest or break the original swing high. They sent it down lower. Boom, came up. So in this scenario, when I measured the bigger range, you can see that they manipulated above the 50% range, right? That's the manipulation. But it's not necessarily that helpful, because in real time, I mean, you can measure it, right? If, let's say, you wanted to take a move, once you were able to determine that we started reversing, right? If you truly thought we were reversing, you would want to watch this 38%, right? And you can create this channel, basically. Let's move these here. So this would be the first 2 reference points of the top channel, and then this would be the first 2 reference points of the bottom channel to go up, that is, right? Like, you could also create like a, let me make not extended, right? You could also, these are 2 swing lows where you initially get some price action down that way, but once you get these 2 reference points, right? So you get the 2 top reference points before the second reference points on the bottom is created. But once you get those, you extend your trend lines. It creates this channel, and you can kind of see how price behaves inside of there. Just choppiness, like there's no real direction. It's just behaving inside of the channel, and you're not really getting any real moves. Like, unless you're like a high frequency scalp trader, which means like you're in and out the moves really quick, you're not really going to get much from this, right? So unless you're taking a move like off of this big red candle, or these 2 green candles going up, these 2 red candles going up, things like that, this couple green candles, if you're not in and out, or you could play the scalp moves. Like, if you have a lot of capital, or a decent amount of capital, and you were able to detect this channel early on, then you can get some nice quick little scalp moves, but you have to choose the right contracts, because if you choose contracts that expire the same day, next couple days, and they're not close to what the current price of the S&P is in real time, then you're just going to get chopped out of the move, basically. But if you can choose, let's say, a contract that's 4 or 5 days to a week out, it's relatively close to the current price of the S&P 500 or SPY, and you have a decent amount of capital, you can scalp some of these trades, be in and out, and be good, right? But if you're more so like a trend-based trader and you're looking for more of a sustained move that's going to go to an important level or area, this is not really going to work for you, right? So we can see here, once they came down and, you were able to detect that a reversal was coming, they just chopped inside of this channel. And then the first hit of the 38%, you see they rejected here. They went up again, tried to manipulate above, then they rejected, started teetering along it, using it as support now in the aftermarket. And now we're above the 38% in aftermarket. The market's closed now. It's currently 8:17 p.m. on Friday, July 18th, 2025. And so you can see here, they got up to the 50% here, rejected again. So they're going to probably start now teetering sideways for more of a sustained flat trading until they get over here potentially on the channel and then pop back up. And so we'll see how much they operate inside of this channel, but you got some inefficiencies sitting up top that could potentially send us down and have us break below the channel. The likeliness of it, I'm not sure. You never really know unless you have some level 2 data, or you're paying or you're able to access some book-based data to see when the orders and volume and institutions are coming into the market. But if you don't have that stuff, you gotta rely on your analysis and the other key things that you're able to use. So in my mind, when I see these types of things, I don't have that type of information. We do have the fixed volume indicator. So if we throw that on, let's see what that says. If we can determine anything from that. We got the volume profile, fixed range from lonesome, the something, I can't see the full name. But let's see. It looks like there's a lot of volume in this area right now, right? A lot of chopping, a lot of volume from buyers and sellers. And it looks like a key level is at 627.29, which they haven't come back to address just yet. And it actually strikes right through this bullish fair value gap right here. So, they could potentially dig down into that bullish fair value gap, which is, below the bottom part of the channel. They can manipulate below it, get support off of it, and pop back up into the channel and even break above. So it all depends, right? Let me turn this off. But as I said, right now, the biggest thing or the key thing you want to take away, let's see, we got 13 minutes. You want to take away from this is what we talked about before, is we got our analysis played out based on what we saw in the higher time frame, where you got to close above a key level, the highs got swept, and then they reversed. We also saw the 1-2-2 reversal to the downside setup, which played out beautifully. And so, you just use a couple different things to give you some confluence, or more than one variable that gives you some type of confirmation based on the deduction that you're trying to make regarding whatever setup you're trying to catch, right? So I'll be watching this to see how we behave inside of this channel. You got a pretty steep channel that we took going down, and we broke out of that. So you got this channel here. Oopsie, let's see. Got this channel here, right? Got that channel here, so you got this, manipulate a little bit. So when you draw the channels and the trend lines properly, depending on what you're trying to look at, for the channels, you can see where the manipulations take place. So if you're seeing a manipulation that also coincides with us manipulating above the 50%, double tapping into the bearish fair value gap to get sent back down, those are key things to be able to identify, right? Those are the things you want to look for. If you clearly see that we're behaving inside of a channel, right? They jumped into the channel here. You get like a tap up here, not the most perfectly, but good enough. And then they finally come down here to give it one tap. You get a double tap pop up. So you're noticing this pattern of like a double / triple tap to then go up or come down, right? You got a tap up here, and then this second tap is a manipulation where they go outside of the channel, but then they come back down.
What are you doing?
Then they come back down, right? And then they start going into another channel, and so we're just watching behavior. We don't want to take anything premature when it's doing this crap like this. Like, you just be patient and we wait for something more sustained, right? So for the upcoming week, I'm gonna throw my discount levels on here and the key levels, and then we'll go back on the higher time frames to see what the potential setup might be for next week, to see what type of potential price action we may get for the upcoming week. So we'll keep paying attention to this and see what we get. Let's see what else I'm gonna take all of this off. There's some bearish volume imbalances in here as well, right? So once you do this for a while, your eyes get trained to certain areas. So this is a bearish volume imbalance, which is basically an inefficiency that was created while we were going down. And so we want to pay attention to that. While we were going down, you want to pay attention to that. So essentially what happened was we were going down so aggressively that they left orders behind within this gap, right? Because it opened here, pushed up, and then sold it down so quick that it left a volume imbalance right in this gap area. So I think when we measured it, it coincided with like a key level on the Fibonacci. So there's a high probability. There is a high probability we can go and tap into this to come back down. It all depends. I have to do more in-depth analysis to see, but let's see here for now. If we even go over here to a higher swing high that was created off when pre-market opened down to the low of the day, let's see what happens. Look at this. Would you look at that? The 62%, or the last level that should be pushing us back down, if we're wicking into it and resisting and keep closing below it, basically coincides with that bearish volume imbalance that we detected. And then there's a bearish fair value gap sitting above it and below it. So these are some key inefficiencies sitting around in this area. I feel like we're going to have some issues breaking through this initially. We can break through it, but I don't think it's going to be, one of those easy pop throughs. We're going to do some rejection in here first, do some balancing out before we truly break through it to go back up. If in fact we're going to go back up right now. So we shall see what happens with that. So we'll do some more analysis on SPY. Let me, so these are things I just pay attention to, right? Look, you can draw, look at this, right? You draw these channels, you can clearly see, right? When you draw these channels, You try to make them as equal as possible, right? The bottom side here gives you a cleaner draw because all of these are hitting it pretty nicely for the most part. The top is hitting it like here, but then you get this manipulation out of here. So when you draw it, you can see that this is the BS right here. And you clearly see what happened as they manipulated and did this little chop fest coming down before sending it down properly. Now we finally broke out of it and we start getting this sideways consolidation. All right. So we're going to change this color to green. So they could chop in this area. We'll see how we open in pre-market. But we could chop in this area, get sent back down here. So they might do some ping-ponging and stuff like that. Like I said, we'll once we do the more in-depth higher time frame analysis, we'll be able to see what might be taking place. Real quick, before we finish up, I just wanted to show you gold real quick. Let's go on. Let me try to save this. We're going to go on to a different, let me see if I could find real quick the other template I was using. So we got back testing, we got SPX and Spy. So let's go to XPX naked to see if this was the one that I had the gold analysis on that I was using. Let me see. No, this is not it. So let's see. Is it Labyrinth wavelength maybe? Let's see. Yes, let's open anyway. Let's see if I could find it. If not, we'll wrap up for the evening and I'll just give you all a separate analysis on what happened to gold based on what we were watching from before. Bubble Up Season 4. Let's see. I'm going to have to find it. Also, I may make a video over the weekend just taking a look at Bitcoin and what's going on with that. So I can't find the gold one, the template that we were looking at from before, so I'll have to find it and then go back to it. But that's pretty much it, folks. So that's what happened today. Got chopped up, lost those 2 trades. Risk was pretty good, so I'm pretty cool on what the loss was because I had it in my mind and I got it at a good place to where, even though it went against me or it chopped. Didn't necessarily go against me, just kind of chopped the whole way. And the theta or the time decay variable of the contract just messed the contracts up because we weren't really moving in a sustained direction. So we'll do an analysis coming up for what's to potentially come for the week on Spy. We'll take a look at where we are with gold, and then we may take a look at Bitcoin to see what's going on with that. But other than that, folks, please make sure to like, subscribe, share, and comment under the video. Maybe share some tickers you want to take a look at. Maybe share some things that you utilize to help with your analysis. And if you feel so inclined to donate, remember my Cash App is $Mind Dialogue. So MoneySign MINEDIALOGUE. My email if you want to set up a free private session consultation and potentially determine if we can work from there going forward. I can help you with determining either if you're investments or you're a trader, some solid areas to get in, areas to potentially consider taking profit. If you're just watching a ticker and really want to see where the most optimal place is to get in, I can help you with that as well. I can help you with overall analysis, long term, last 5, 10 years, more current, whatever it is that you want to do, we can make it happen, and I'll do it to the best of my ability. But if you got some gems, again, please like, comment, share, subscribe, and that's what it is, folks. I appreciate y'all, dialoguers, and we'll connect soon. Have a great day. Have a great weekend on purpose. Love.